Hello and welcome to 10-minute-ish stock pitch, where most of my pitches are over 10 minutes. But that being said, let's get started on this one. Today we're going to be doing HUT, also known as HUT 8, HUT 8 Mining Corp, and HUT 8. They went through a recent merger, so if you look for HUT 8 Corp, HUT 8 Mining Corp, HUT 8 Mining, yeah. So you'll see a lot of it's actually kind of hard to get good information on this one. You can see here we have 2012 through 2020. To get the actual figures, you have to go into SEC documents and everything, because if you pull up what am I, Mining Corp, HUT 8 common stock, we just get some of 2021 and 2022. They've gone through some mergers and things, so it's a little bit difficult to get good information. But this will serve our purposes for the moment, and then I'll go over more recent figures. So just give you kind of a little basis on the stock. $483 million, and this is in the Bitcoin mining industry. I was looking at the top gainers for Friday, and I decided I wanted to do one over the Bitcoin mining style companies, because they're pretty interesting, and it seems anytime Bitcoin goes on a run, these companies start to go up and then they come down pretty quick. So I kind of wanted to go over a little bit why that is, and also a little bit why this one may be possibly more interesting than some of the other Bitcoin mining companies. So without further ado, we can get into some of the basic things here. IBL is just not interesting. That's a little bit more for the near term. With the things they have going in the future, it could possibly be interesting at one point. But for me, these companies are kind of a big no. It's just a super competitive industry. They're growing really fast, and they don't care about earnings. In fact, it's kind of almost silly for them to make money, believe it or not. And then one of the other things you have to realize is one of the reasons people buy these companies up a lot is because they say, oh, the price of Bitcoin is high, these companies are going to be high. They don't actually make money off of the price of Bitcoin. It's a pretty common misconception. Even in their even in their conference calls, they'll tell you about this. So you can see here with the 1 year, this is the price of Bitcoin, but they actually make money off the hash price of Bitcoin. And you can see this is the hash price of Bitcoin. So while it has went up a little bit recently, you can see, and overall it's down a lot. Now, mind you, there's other things to deal with as far as over time, they've also got more efficient at getting these, right? So, it balances out a little bit, but you can see it's not this meteoric rise in price, because this is what they'll make money off, is hash price index and not necessarily the actual price of Bitcoin. Anyways, so I don't want to get into too much of the specifics. I'm not like a professional on the mining stocks. I just roughly know how they make money, and it's not like a gold mining company, right, where the spot price of gold is high and then they're gonna start ripping off hundreds of percents in earnings increases. But this company specifically does have some interesting things coming for it that I heard in some of their transcript calls, so we can go over that. As I said, I was doing in this primer EVs. Well, I wouldn't take anything with that because these are old figures. Market cap's 500 million. If we look at their most recent September 30th, okay, yeah, total revenue. This is quarterly revenue, so 43 times 4. They're at 172 million a year run rate if they did this all 4 quarters proceeding into the future. And because it's a digital thing or whatever, I guess you kind of use that. Last, for example, the quarter before, the run rate was 35. So if you use 35, that's 140 million a year revenue. And then let's go ahead and do a price to sales here. So price to sales is 3.6 on this company, 3.67. Using old figures, if you use the new figures, using new figures is 2.9. Okay, so a little bit pricey. Obviously, they're expecting growth. This company has some cool things. So, and using their expertise and making efficient data centers, they're also looking to outsource AI data computation and just kind of sell, data computation time to other companies. They mentioned in the conference call transcript that and one of the new products they're bringing online together. Combined, we'll be looking at somewhere around 9 figures worth of revenue, which is in the hundred millions. And with a generous run rate of, I think what I said, 172 million a year. That should be pretty significant for them. So you can see maybe why they have a little bit higher of a price to sales. 2.9 at the low end, depending on whatever their future growth ends up being. So you can see growth average here is 60%. One of the reasons this makes not interesting, even though with that great growth, is because you also have to take in fact the increase in diluted shares here has been quite substantial. Remember, this is 2008, 2019, 2020. I would reckon, I don't have figures at the moment, but one of the reasons I don't like this industry and companies in general, so this is Riot, they are also a Bitcoin mining thing. Diluted shares here, you can see, they go up at least almost 50% every year. Bitfarms gonna have the same thing here. Diluted shares, yeah, again, 20% a year. Cypher Mining. Oh, this one doesn't use diluted shares, but there's extreme asset growth, so I'm almost probably the same thing, just on another side. Diluted shares, 360, 60, 60. So yeah, this one's like lessened here, Hive, but you get the idea. In all these companies, you can see, essentially what you're looking for here is revenue growth, and maybe you keep an eye on gross profit here or there, just to watch in case it's nice, but realistically, like these companies, they make the best money off of scale, and they want to do bigger projects and bigger deals, so they can have the lowest cost of producing and mining these things. So the more money they spend and the more money they lose, the better their long-term prospects are. So it's kind of a big fight and a race towards who can spend the most money. So if you're analyzing one of these companies, one of the things you want to look at, revenue growth over time. You want to look at market cap as a function of the current run rate of revenue, and then you also probably want to be looking at. I go to the balance sheet, look at shareholder equity, so you can see how much equity they have for use of leverage for future growth, and then you'll also as I said, probably to keep an eye on gross profit and gross margin. Obviously, those will fluctuate, and you have to figure out why those numbers are different all the time. But yeah, operating profit, earnings per share, yeah, right, for a while for these companies. It's just kind of the nature of the business and what they're doing. That's why I don't like them, because, you can see my preference for free cash flow and everything. Not really a big fan of these types of technologies, or of these types of companies, sorry. Technology is fine. But yeah, so the reason I said this one was interesting is because they have some contracts coming up here, where they're going to be looking at doing some AI data processing. And it seems like it's going to be pretty good revenue, and a pretty efficient use of their capital as well. These types of things, it's like the more money you spend, the better. Even on the conference calls, you can hear them talking about, they acquired some tier 1 assets and they're super happy with them. Because the more money you spend, the bigger scale you go at, the more efficiently you can mine Bitcoin and do all the other things you need to do, and you can do it for a lower cost. So it's kind of a game of who can spend the most money and figure out how to pull the most levers to get the newest and nicest equipment. And obviously, that's a game where it just keeps, it's constantly adapting, right? But really not the kind of thing you want to be in as an investor, especially with that share count. And it just, most of these companies are growing shares at over 50% a year. So, every year you're losing 50% if, so these basically revenue growth needs to be like over 100% on these companies to even be worth the pain. So, which I think this company average growth is 60%. So, not exactly their current growth is 100%. If they can keep that up, right, maybe it's worth the share dilution. So that's something you have to figure out on your own, and just kind of really look at, because with these companies, as I said, putting out an operating profit, putting out earnings or any kind of cash flow is almost a bad idea for them, right? You'll be wanting to look at their individual efficiency as far as how they're building things, how they're getting deals, um, efficiency per dollar spent on making these new data centers, right? And then you want to look at their actual computing power and start to compare things in that realm, and that's how you would kind of go about judging these companies. But again, kind of a long study and kind of difficult for something that you're not going to see returns in for a while. So for me, this would be a very difficult company to hold, but it's something I'm looking at in case anything ever happens. Maybe some players start to consolidate and it doesn't get so competitive, or this is something you could definitely look at where if the actual need for this thing tanks and then they all consolidate together and then they actually start to kind of turn around and work to like try and produce a profit instead of spend every dollar possible in every way they can get it. It may actually be an okay business. So you can see business for, I've talked about how terrible of a business this is. So, it makes sense there. Moat for, while this company specifically maybe has a little bit more of a moat because they're trying to do other things and, they have access to some nicer, nicer, more efficient, data centers and everything that they're using. This isn't necessarily a moat business. The only kind of moat you have is if you can spend more money than the next person. So, as I said, look at things like not just the market cap. Well, the market cap is kind of a bad thing, but look at shareholder equity, see where that's at, and go from there. Obviously, these are old numbers, so we would have to get shareholder equity from here. But moving on here, cheap, not exactly cheap. As I said, like if you want to be generous, you're looking at like 3 times price to sales. Mind you, they're predicting somewhere near 100% growth. But that's tough to tell. Okay, here you go. Shareholder equity right now is 700 million. So that's not too bad. Management. This is really honestly a tougher thing to analyze because I don't like the business, so it's tough for me to analyze management. And then the nature of this business is that you have to pull every lever possible to to get the nicest things and grow into the newest technologies, right? So you're always going to be diluting shares. You're always going to be your capital allocation is always going to look poor until basically it's time to stop growing. So yeah, that's why I gave management a 5 there. Not really their fault, but the ways by which I analyze management, this is not a company I want to be a part of. So that's why I give it a not interesting. You can do your own research and see what you like there. I didn't, because this is not interesting just off face value, I didn't feel a need to go super deep into all of the things, Bitcoin mining, whatever. There could be something there if you want to go ahead and do the time. If you do, let me know. Maybe I'll look back into it. Anyways, that's all I got for you. Looks like I made it in about 13 minutes, so we're staying just under the 15-minute mark consistently. But I'm not changing the name, all right? So thank you very much for watching. Have a good day.